Okay, so please let me know whether you are able to see my screen. Are you able to see my screen? 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 Yes. Thank you so much. Great. Now we are told here, look at the required side first of all. They want us to give them goodwill on acquisition of L Limited, goodwill on acquisition of L Limited and U Limited. And then number two, to consolidate the statement of comprehensive income for P Limited for the year ended 31st March 2013. Note, round off the Uganda shillings to the nearest Kenya shillings, So we are told here, ladies and gentlemen, up here that P Limited, a company, P Limited, a company, acquired a controlling interest in L Limited on 1st October 2012. P Limited also acquired a controlling interest in Uganda, a Ugandan company that uses Uganda shillings to report its financial results. The statement of comprehensive income for the three companies for the year ended 31st March are given there. So they have given us, ladies and gentlemen, here, they have given us the sales for P. They have given us the sales for P. We have the cost of sales. We have gross profit, etc. So we are told here, additional information, P Limited acquired 75% of L Limited through a share exchange, through an exchange of 3.5 million equity shares of Kenya shillings 10 each. The market value of the equity shares as at that date was Kenya shillings 28 each. The fair value of the net assets of L Limited as at the date of acquisition was Kenya shillings 100 million. P Limited acquired 60% of U Limited on 1st October 2012 for Kenya shillings 47.5 million in cash. The fair value of the net assets of U Limited on that date amounted to Uganda shillings 1,800 million. As at 31st March 2013, the exchange gain on retranslation of the net investment in U Limited was determined at Kenya shillings 6.2 million. This is a good examiner, very good examiner. He's giving me the exchange, foreign exchange reserve for net assets. No, 3, during the year ended 31st March 2013, P Limited sold goods to L Limited for Kenya shillings 28 million at cost plus 25%. 40% of these goods were still held within the group as at 31st March 2013. We are told the P Limited operates some machines that pose an environmental hazard for which they have an irrevocable agreement to undertake decommissioning of the machines at the end of their useful life at a cost of 18 million. So we are told, ladies and gentlemen, here, they're telling us something very nice here, that the management estimates the remaining useful life of the machines to be 5 years and the relevant discount rate to be 12%. This item has not been accounted for, has only been accounted for. The goodwill on acquisition of U Limited was considered to be impaired by 30% as of 31st March 2013. On 1st January 2013, P Limited sold one third of its investment in L Limited for a cash consideration of Kenya shilling 62 million. The fair value of the net assets on that date was 184 million. P Limited will account for the 50% interest in L Limited using the equity method in accordance with the IFRS 11 joint arrangements. Then they have given us the following exchange rates are relevant. We can see 1st October when we were acquiring Farm L. We can see 31st March. We can see average for the year. We have an average for 6 months to 31st March 2013. Income and expenses of all the three companies were deemed to accrue evenly throughout the year. So they want us to give them goodwill of the two companies. That I shall be able to do, and I shall do it very confidently, very confidently. That's not something that I would really even bother about. So goodwill. So I don't even need to look at the group structure. They want me to do something very easy. They want me to give them goodwill for the two companies. So I'll talk of goodwill for Farm L. Goodwill for Farm L. So we have here goodwill for Farm L. I think there is a problem. Let me just finish this and then I'll be able to tell you what we shall do. So goodwill for Farm L, is there somebody who can advise Mwalimu here? What am I going to do to be able to get this goodwill for Farm L? Is there somebody who can remind us? Is there somebody who can remind us here? What shall we do for us to get goodwill for Farm L? Can somebody remind us? Quite easy. What I'll do is to come and look at how much has the parent paid. So consideration paid by the parent. So that is very important. That's very important. Then I have here consideration paid by NCI. Paid by NCI. So that is, of course, the fair value of NCI. Fair value of NCI. Fair value of NCI, right? And then, of course, the two will be able to give me the total consideration here. The two will give me the total consideration. The two will give me the total consideration. The two will give me, yes. Thank you very much, Irene. So once I have the total consideration, then I'll come and less the net assets, at acquisition. Fortunately, this was a good examiner. He gave us the net assets at acquisition. So in this question, do we have the consideration that was paid by the parent? Do we have the consideration that was paid by the parent? Do we have the consideration that was paid by the parent? Is there anybody who can see it's Farm L? Look at note number 1. P Limited acquired 75% of L Limited through an exchange of 3.5 million equity shares, 3.5 million equity shares of Kenya shillings 10 each. So remember, 10 is your par value. But you see, we are concerned with the consideration, the value that was given out by the parent. The market value of the equity shares as at this date was 28 bob. So I'm concerned with this fair value. I'm concerned with this market value. So the shares they gave out here were 3.5 million and each share was worth 28. Each share was worth 28. Therefore, the consideration paid by the parent will be 3.5 times 28 per share. Could you kindly give me this? Could you kindly give me this? Yes, I'm already aware of that. I just want to stop at somewhere for me to sort the mess out, right? So what is 3.5 times 28? I would want my figures to be in millions. Yes, 3.5 times 28. So that, I'm told, gives me 98. Ladies and gentlemen, if you look at this question very well, listen and listen to me very well here. If you look at this question very well, we are told the market value of the equity shares at that date was 28. The fair value of the net assets of L Limited at this date was 100 million. So the fair value of the net assets at acquisition were 100 million. 100 million. 100 million. 100 million. So ladies and gentlemen, listen and listen to me very well. This examiner has not given us the value of NCI. He has not given us the value of NCI. What should we do in an exam when we're not given the value of NCI? Cry? What should we do when we're not given the value of NCI? It's partial method, isn't it? It's partial method. So first of all, tell me here, do we know the percentage that the percentage of L that the parent bought? The percentage of L that the parent bought in this question, is it given? The parent bought 75%. Listen and listen to me very well. So in this case here, the parent here bought 75% of L. So meaning that if the parent here has 75% of L, then NCI will be having what percentage? NCI will be having what percentage? 25%, isn't it? NCI will be having 25%, yes, because the two percentages must add up to 100%. So NCI will be having 25%. So then to get the consideration paid by NCI, I will take, in this case here, the proportionate share of NCI of the assets, the proportionate value of the net assets. So it is 25% of what here? Of 100. So 25% of 100 gives me what figure, somebody? 25% of 100 gives me what figure, somebody? It gives me 25, like that. And then therefore, the total consideration will be 98 plus now 25. So this is 25% of 100, which is 25. So 25 plus 98 gives me what figure, somebody here? Please talk to me, 123. So this gives me 123. And if you subtract like that, then you'll be able to give us the goodwill. 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 The goodwill. Yes, at acquisition. Could you kindly give me this? Goodwill at acquisition. So somebody is telling me it is 23. Unfortunately for L, there is no impairment. For L, there is no impairment given in the question. So impairment loss is 0, which will end up giving me still 23 as the goodwill at reporting. Goodwill at what here? At reporting. So the goodwill at reporting here is 23. The goodwill at reporting 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 is 23. Now, I would want you to listen and listen to me very well. Now, can I rub this? Can I rub this? Can I rub this? Can I rub this? Yes. Now listen and listen to me very well. Listen here. The consideration that was paid, this is method 2 of getting this goodwill, partial method, method 2. So the consideration paid by the parent, the consideration paid by the parent, you guys had given me a figure. What was the figure that was paid by the parent? Remember, it was 3.5 million shares. And then you gave me a market value per share of 28. So you guys gave me a figure of 98. And then now listen and listen to me very well. They have not given us the NCI's percentage. So when they don't give us the NCI percentage, we are making use of the partial method, which you can also do it this way. Come and less share of parents' net asset. Share of parents, the parents here, the share of the parents' net assets. Remember, you're only putting in a value of the parent, right? So it can only be okay if also in terms of net assets, I recognize the net assets of the parent. And remember, the parent has got what percentage here, somebody? 75%. The parent has got 75%. So then it's going to be 75% of what? Are you able to remember the net assets of this company? Net assets of this company, they were 100. They were 100. So then 75% of 100 will end up giving me how much here? Somebody will end up giving me 75. When you take 75 away from 98, we shall end up getting our goodwill of what here? Of 23. This is the proper partial method that I recommend to you. So in this case, we are accounting for goodwill partially. So this goodwill belongs to the parent only. Belongs to the parent only. Please remember that we only use the full method when we are given the fair value of NCI. When we are given the fair value of NCI, So I hope this is clear and better. I hope everybody is able to accept this. I hope everybody is able to accept this as a better method, right? Right. Great. Thank you very much. So please, let's go straight away to method, not method, but the other company. Let's compute goodwill of the other company. Let's compute goodwill of the other company. So in this case here, we are computing goodwill for you. Goodwill for company U. Where is company U based at? Where is company U based? It's a Ugandan farm. Ugandan farm. So then I would want to give you a minute. I would want to give you 1 minute. You try computing goodwill for Uganda. Try computing goodwill for Uganda. Try computing goodwill for Uganda. It's a subsidiary. Try computing goodwill for Uganda. For Uganda. Ladies and gentlemen, remember that this goodwill for you is a subsidiary which is based in which country? In Uganda. So the most important thing you're required to remember here is that we shall compute this goodwill in Uganda shillings. We shall compute this goodwill in Uganda shillings. So then please move with speed and give me the parent's consideration, how much the parent pay to acquire its stake in Uganda. How much was paid to acquire the stake in Uganda? In Uganda. They're not talking to me. I don't know why. They're not talking to me. I don't know why. 1140 Uganda shillings. Yes. 1140 Uganda shillings. Thank you very much. Thank you very much. I want to believe that everybody has seen how this figure was gotten. I want to believe everybody in this class has this figure. True or false? We mature people, we speak very fast. If it's false, it's false. If it's false, it's false. Yes, yes, ladies and gentlemen, remember, in this case here, they paid 47.5 million Kenya shillings. And if you recall, this consideration was paid at the date of acquisition. So to translate these Kenya shillings to Uganda shillings, I will need the acquisition rate, the acquisition exchange rate, which this examiner has told us. The acquisition of the historical exchange rate, this examiner has been able to tell us, it's here. It's here. I can see it. I can see it. I can see it. I can see it. I can see this. I can see this, ladies and gentlemen. 1st October 2012 was 24. 31st March 2013 was 27.5. And the Uganda subsidiary was acquired on 1st October 2012. You can see P Limited acquired 60% of Uganda on 1st October 2012 for 47. So I should be able to use the 1st October 2012 rate, which is what here, 24. Which is 24 times 24, yes, times 20. Remember, it is 24 Uganda shillings equals 1 Kenya shilling. How about 47.5 Kenya shillings? How much will this translate to in terms of Uganda shilling? Can somebody do this multiplication for me? What is this times this? Somebody give me this figure. Somebody confirm that 1140 is correct. It's 1140. Thank you very much, Penina. It's 1140. So from there, ladies and gentlemen, I'll move with haste and subtract the net assets. So come on, the less net assets less net assets of this, of course, Ugandan farm at acquisition date. Are you able to see those net assets, the value of the net assets of Uganda? Net assets of Uganda, net assets of Uganda, net assets of Uganda, 1,800. But you see, this 1,800 is the total, the full value of net assets, and yet here we need the partiality. So we need to know the percentage. What percentage of you did we acquire? What percentage of you did you acquire? We acquired what percentage? Can someone talk to me tonight? What percentage of you did we acquire? We acquired 60%. We acquired 60%. So if it's partiality, then I can only recognize the percentage of the parent only here. So come and multiply these with 60%. So 1,800 times 0.6 gives me what figure, somebody? 1,800 times 0.6 gives me 1,080. Thank you very much. So please subtract there for you to be able to give us the goodwill, at acquisition. Give us goodwill at acquisition. Somebody tells me it is 60. Somebody tells me it is 60. Thank you very much. Now, once you get goodwill at acquisition, you as an FR expert, as an FR scholar, what is the next thing that comes to your mind? Don't tell me nothing. Don't tell me nothing. Don't tell me nothing. Impairment loss. Thank you very much. Impairment loss. So impairment loss. So impairment loss, what is the percentage given there? Impairment loss, what is the percentage given there? 30%. So it is 30%, 30% of 60. So 30% of 60 gives me what? 30% of 60 gives me what figure? It's 18. So please come here, subtract. We are able to get goodwill. We are able to get goodwill at what year? At reporting. Goodwill at reporting. Is there anybody who can give me this figure? Betty, Jeremiah, they're giving me a figure of 42. Now, ladies and gentlemen, this is quite awesome. Then could you kindly tell me, even if you're not asked, the moment you have this goodwill for Uganda, in terms of Uganda shillings, what do you think will be the next step for us? We translate this to Kenya shillings, isn't it? We translate this to Kenya shillings, yes. Translate this to Kenya shillings. So when you're translating, you have to be quite, you must be quite a wise man. So who can talk to us? Goodwill at acquisition, we need to come and translate this using which rate? Goodwill at acquisition, reporting. Reporting at should be historical. Should it be acquisition rate, isn't it? Acquisition or historical rate. So could you kindly give me this historical rate? Could you kindly give me this historical rate? Could you kindly give me this historical rate? Historical rate. Is there somebody who can see the historical rate here? Is there somebody who can see the historical rate? Is there somebody who can see the historical rate? Is there somebody who can see the historical rate? Is there somebody who can see the historical rate? Historical rate is 24. Thank you very much. So remember, all these are Uganda shillings. So when I'm translating, will I come and take these 60 Uganda shillings times 24 Uganda shillings per Kenya shilling? Is this what you expect me to do? Is this what you expect me to do? Because the 24, ladies and gentlemen, if you look at this very keenly, they have told us that these 24, these are Uganda shillings per Kenya. If you try doing that funny thing, you'll end up getting a currency which doesn't make sense. Because this will be Uganda shillings, Uganda shillings. When you multiply the two, it will be Uganda shillings squared. Even Museveni will really hit you hard. Go away, you stupid, foolish Kenyan. Right? There's no currency which is ever squared. Right? So if that is the case, if the terms here are quite the same, you need to come and do what here somebody divide. We need to come and divide there. We need to go and divide there. We need to go and divide. All right? Or rather, you can also opt to do this thing in your mother tongue. Talk of 24 Uganda shilling equals 1 Kenya shilling. Then how about 60 Uganda shilling? If you'll be able to see straight away, it's about division. It's about division. Ladies and gentlemen, how about impairment loss? Could you kindly tell me the rate which I'm going to use to translate this 18 million Uganda shillings to Kenya shillings? Could you kindly give me the rate? Thank you very much, Victor. It's a profit and loss item. It's a profit and loss item, so I'm going to use the average. But this examiner, I can assure you, was a brilliant examiner. I love such examiners. I love such examiners because this examiner was able to ensure that most of the students in this sitting got a 0 in this question. He gave you 2 averages. So we have the average for the year as 25, average for 6 months as 26.5. So between the two, of course, we are going to pick only one. So which one should I pick, ladies and gentlemen here? Which one should I pick? Which one should I pick? Should I work with 25 or should I work with 26.5? Now listen, we acquired the P in which period? We acquired the P, ladies and gentlemen. We acquired the P, ladies and gentlemen, in which, at which date here? 1st of October 20, we acquired you, 1st October 2012. 1st October 2012. So we have here the date of acquisition. So we have our DOA, we have our DOA, we have our DOA, date of acquisition. So the date of acquisition here was 31st October. The date of acquisition was first, actually. 1st October 2012 was 1st October 2012 was 1st October 2012, 1st October 2012. And then now, ladies and gentlemen, after that, we have the date of the financial statements. The date of the financial statements given, the date of the financial statements given, the date of the financial statements given. We have these financial statements given here. So for the year ended 31st March 2013, 31st March 2013. So we have 31st March 2013. Ladies and gentlemen, could you kindly count the number of months between the DOA and the DOF? Tell me, how many months do we stay with this subsidiary? How many months do we stay with this subsidiary? For some reason, ladies do not know how to count this number of months very well. Most of them don't get it right. Men, I know men, we are always accurate with their time, 100%. So count them loudly. This is October. So we have October, November, December, January, February, end of March. These are what here? 6 months, yes, 6 months, 6 months. So then it can only be prudent for us to use the average exchange rate for 6 months to the end of the year, because this asset was only ours for the last 6 months. For the last 6 months. Iko mwanafunzi angetupwa nje hapo na examiner? Iko mwanafunzi angetupwa hapo nje na examiner? KASNEB examiner. KASNEB examiner. So ladies and gentlemen, in this case here, we have average for 6 months to 31st. It is 26 point what here? 26.5. So ladies and gentlemen, then come here and divide this by 26 point what here? 0.5. How about goodwill at reporting? How about goodwill at reporting? What am I going to use? What am I going to use? Which rate am I going to use? Which rate am I going to use to translate goodwill at reporting? Which rate? The closing rate, end of year rate, the DOF rate. We call it the DOF rate, date of financial statements rate, the date of financial statements rate, the date of financial statements our date of financial statements here is 31st March 2013. And you can see at 31st March 2013, 27.5, 27.5. So in this case here, Karam, here, ladies and gentlemen, and put 27.5 there, and then your advisors. And then your advisors. Your advisors. If I am a good student who knows really what is being done here, the next thing that I will think about here will be the exchange reserve on goodwill. The exchange reserve on goodwill. I will think about the exchange reserve on goodwill. The exchange reserve on goodwill. Is there somebody who will be able to give us this exchange reserve on goodwill? Is there somebody who can give us this exchange reserve on goodwill? Is there somebody who can give us the exchange reserve on goodwill? Exchange reserve on goodwill. Exchange reserve on goodwill. So divide this by 27.5. So before we do that, could you kindly give me these figures? Could you kindly give me these figures very first? Please give me the first one. Please give me the first one. Kindly 60 divided by this. What figure are we getting there, somebody? They're telling me, Mwalimu, this is supposed to be 2.5. How about 18 divided by 26.5? 0.68. Thank you very much. 0.68. Remember, it's a deductible item. It's a deductible item. How about this 42 divided by this? 42 divided by this. Somebody is giving me a figure of 1.53. Ladies and gentlemen, please be kinder to me tonight, as you have always been. Yeah, we shall round off the final. When you're told to round off, you don't round off at this stage of workings, no. You round off when you are doing the final figures for the financial statements, for the consolidated financial statement. Not at this stage. You'll get very big errors. You'll get very big errors. Yes. Okay, Charles, please, your video is always on. I don't know why. Always try to stop your video, mute your video so that we don't interrupt other students. Thank you very much. Thank you very much. So, ladies and gentlemen, what are we going? Is there somebody who has already gotten the exchange reserve? The exchange reserve for goodwill, the foreign exchange reserve for goodwill. Ruth tells me 3.35. Exchange reserve for goodwill. Exchange reserve for goodwill. Negative 0.29. I love that. 0.29 positive. I love that. Good things are coming. Good things are coming. Good things are coming. Good things are coming. And negative 0. Okay. So in this case here, the exchange reserve will be equal to this figure minus the figure that we have here, which is a negative itself, minus this. What figure do we have there? So you cram some of these things, you cram them. So 1.53 minus this one is negative itself, right? Please use your negatives. Use your calculator very well. 1.53, right? Minus 0.68, right? Whatever we get, we say minus 2.5. Minus 2.5. I'm being given a figure of negative 0.29. Negative 0.29, like that. Negative 0.29. So it's an exchange reserve loss. It's an exchange reserve loss. It's an exchange reserve loss. So are we in agreement, all of us, regarding this figure? Is this figure correct? Is this figure correct? Yes. Thank you very much. At this particular juncture, what I'll do, I'll come and give my examiner without much ado. I will come and give my examiner the total exchange reserve. Total exchange reserve. So I'll come and give my examiner the total exchange reserve, which will be the exchange reserve, the exchange reserve, the exchange reserve from my net assets translation and the exchange reserve from goodwill. From goodwill. Some books will call this operations. Is there anybody who can give us this figure? At least this one I know is negative 0.29. How about this one here, somebody? How about this one here? The exchange reserve from net assets. Exchange reserve from net assets, what do we have here, somebody? Exchange reserve from net assets. Exchange reserve from net assets. Exchange, they're not talking to me, I don't know why. Exchange reserve from net assets. Exchange reserve from net assets. Exchange reserve from net assets. What do we have there? Somebody, exchange reserve from net assets. We've been told somewhere here in note number 2. In note number 2, we are told P Limited acquired 60% of U Limited on 1st October 2012 for Kenya shillings 47.5 million in cash. The fair value of the net assets of U Limited on that date amounted to Uganda shillings 1,800 million. As of 1st March 2013, the exchange gain on retranslation of the net investments in U Limited was determined as Kenya shillings 6.2 million. So this is 6.2 million like this. Therefore, the total will be equal to what? Please give me a figure to write here. Give me a figure to write here. Give me a figure to write here. 6.2 plus minus 0.29. I'm combining the two. I'm combining the two. You guys must speak to me very fast. You must speak to me very fast. So we have here 5.91. Ladies and gentlemen, let's not lose focus. Let's not lose focus. Remember, at the end of the day, what this examiner wants us to do is to come up with a consolidated income statement. Is to come up with a consolidated income statement. All right? So I'll only be able to check on one thing here. For me to consolidate these income statements, I'll only check on one thing, ladies and gentlemen, here, which is what here? This is the thing I'll check here. Note number 3. During the year ended 31st March 2013, P Limited sold goods to L Limited for Kenya shillings 28 million at a cost plus 25%. Remember, P and L. L is our subsidiary. When we sell goods to our subsidiaries, or when subsidiaries here sell to parent companies, always ensure that you don't have unrealized profits on stock. So here there is an element of unrealized profit on stock that I need to compute immediately. Is there somebody who can go ahead and give us the formula of unrealized profit on stock? Is there somebody who can give us the formula for UPS? Is there somebody who can give us the formula for UPS? Somebody give us the formula for UPS. Is there anybody who will be able to give us the formula for UPS? Is there anybody who will give us the formula for UPS? Ah, yes. I'm so sure these guys are able to remember this Reese because there must be a lady here going by this good name Rispa. Yes. To get UPS, we normally take profit margin times Reese. Very important. Profit margin times Reese, where Reese is the remaining intra-sales. Remaining intra-sales. Like in this question, is there anybody who can give us this Reese value? Is there somebody who can give us this Reese value very easily? Is there anybody who can give us this Reese value very easily? Reese value very easily. Is there somebody who can give us Reese value very easily? Reese value very easily. Risk value. From note number 3, is there anybody who can give us the Reese value? The total goods sold were 28 million. It's 40% of these goods which were still held well within the group. So the remaining intra-sales will be equal to what? The remaining intra-sales will be 11.2. You guys are correct. You guys are bright. Because what you've told me is that this Reese will be 40% was remaining with us times 28, which in this case here will give us 11.2. Now, could you then kindly go ahead and give me UPS, substitute here. Kindly go ahead and give me the unrealized profit on stock. Please give me the unrealized profit on stock. Please give me the unrealized profit on stock. Please give me the unrealized profit on stock. Are you able to see the profit margin? These guys are crazy. They gave me profit on cost. When they tell me it's profit on cost, that is markup. Markup, when you hear profit on top of cost, this is markup. This is markup. But if it's profit on revenues or selling price, profit on revenues or selling price, that becomes what we call profit margin. Profit margin. So here they have given us a markup of 25 over 100. 25 over 100, which is the same as 25%. So if it's 25%, could you kindly help me out to change this markup to margin? Is there somebody who can do that for us very fast? Because in group consolidation, we always use profit markup. We always use profit markup. I've seen somebody who has given me a formula of 1 over n plus 1. Quite a good formula, but I'm not the one who taught you that. I'm not the one who taught you that. No, what I told you is that when you have markup here as 25 or 100, markup has always a smaller denominator. The markup pool denominator is always smaller. So margin, it has to be, in this case here, inflated. You must inflate for you to get margin. And how do you do it? You will come and take the denominator there plus the numerator here. So you take the figure that you had there, you add the numerator, not that you add 1 always. So then this will be the same as 25 over 125. So then this one here will be 25 over 125 times the risk that you guys gave me as 11.2 times the risk that you guys gave me as 11.2. So then what will be the UPS? What will be the UPS? The UPS will be 2.24. I'm being told it will be 2.24. And if you're keen, you must have realized that so many students had given us some answers earlier on up there. And trust you me, out of the over 10 answers that were given earlier on, nobody gave us 2.24. Nobody gave us 2.24. True or false? True or false? True or false? You guys, I'll catch you in a minute. I'll catch you in a minute. Let me catch you in a minute here. Let me catch you in a minute. I know you are cheating me. 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 Ladies and gentlemen, if, for example, you are given margin of 1 over 5, what will be the markup? What will be the markup? What will be the markup? If margin is 1 over 5, markup will be? You guys are bright. 1 over 4, yes, because markup has a lower denominator. Add to cost, markup, the one that has got a big margin, a big denominator is the margin. Margin has always a bigger denominator. Markup, I go down. Markup, I go down. So in this case here, for markup, it will be 1 over 5 minus the numerator, like that, which will be 1 over what here? 1 over 4. 1 over 4. But you see, for us, we are quite lucky because we always work with margin, always. So our role is basically to remember that if you go to an exam and realize that a given markup of 30 over 70, then margin will be what here, somebody? If markup is 30 over 70, margin will be what over what? Margin will be what over what? 30 over 100. You guys are bright. Great. You guys are bright. 30 over 100, because for margin, I must always add. Always. So what you're supposed to know, ladies and gentlemen, for margin, listen and listen to me very well. If your markup, if you remember from your section 1, if your markup is A over B, then always your margin will be A over A plus B. Are we together there? Are we together? Are we together? Great. Very important. As we always use what here? The margin. Margin. Now listen and listen to me very well. Before I do my income statement, consolidated income statement, it will be very important for us to count months. I've got no problem with Uganda. Uganda number of months we agreed were how many? We stayed with Uganda as our subsidiary. For how many months? For how many months? 6 months. Thank you so much. 6 months. Thank you so much. Thank you so much. 6 months. How about L? How about L? For L, we have to be careful. We are told note number 1, we acquired 75% of L. So we acquired 75% of L. So we have P here, which acquired 75% of L. Good subsidiary. Which dates? Which dates? We are looking at which dates here. So we have the date of acquisition. The date of acquisition, ladies and gentlemen, they have given us the date of acquisition. The date of acquisition. The date of acquisition, they told us up there. Up here, they told us on 1st April 2012. P Limited acquired a controlling interest in L Limited. So you're talking about 1st April 2012. So 1st of April, 1st of April, 1st April 2012, 1st April 2012, like that. Thank you very much. And do we have any legal changes? Do we have any legal changes like acquisitions or disposals? Yes, we have them. We are told here. We are told here. Look at note 6. On 1st January 2013, P Limited sold 1/3 of its investment in L Limited for cash consideration of 62 million. So we sold. There was a disposal on 1st January 2013. So we have here disposal. The date of disposal is 1st January 2013. Remember here, we had 75% of L. And you're told that we disposed 1/3. So then that leaves us with 2/3. 2/3. So what is 2/3 of 75%? Can somebody give me this figure? They're not talking to me. They aren't talking to me. So somebody is telling me that this should be 50%. And then from there, we have lastly, what we call the date of what year? Financial statements. So date of financial statements, ladies and gentlemen, these ones have been, the date has been provided. The date has been provided. The date has been provided for the financial statements. We are told for the financial statements, it's here, 31st March 2013, 31st March 2013, 31st March 2013, 31st March 2013. Thank you. What happened here? Firm L must have changed its legal status. Here 75 all the way up to here, very comfortable, subsidiary. But now, ladies and gentlemen, from this date moving forward, the status changed. The status changed. It became Mr. 50%. And a Mr. 50% is a handsome Mr. Is a JV, yes. Is a JV. So in this case here, this company was ours to the extent of being a joint venture for the remainder of the period. Mr. 50%. We are controlling 50%. Someone else must be controlling the other 50%. So please count the number of months for us. So please start counting them. If I'm the one doing this and I've got 2 periods apportionments here, I'll always go for the shorter. The shorter is this. So I have January, February, and the whole of March. So this side is 3 months. So this other side is how many months? Because it's a whole year, it must be 9. So 9 months. So for L, 9 months subsidiary, 9 months sub, 3 months JV. JV. Remember, for joint venture, just like an associate, IFRS 11 tells us to use the equity approach, like the profitability approach. Like the moment I've known that this thing is a joint venture for us for the last three months, what I'll do, I'll just take our share of the JV's part. This is a very straightforward thing. The moment I've known it's a joint venture or even an associate, it's equity approach. What's the profit? The joint venture made how much profit for the whole year? You'll be given an income statement. It's here, it's here, it's here. They're telling us, you can see this is L limited. The profit after tax here is 229. The part is 229. So this 229, remember, it's for a whole year. But it was a joint venture to us for how many months? So proration, we must prorata this times 3/12, right? And remember, joint venture, we are recognizing our share, which is what here, somebody, which is 50%. We are recognizing our share, which is 50%. It's equity accounting, IFRS 11. Equity. These are free, low-hanging mark. Low-hanging mark. Is there anybody who can give me this answer? Is there anybody who can give me this answer? Is there anybody who can give me this answer? Is there anybody who can give me this answer? 28.625. Thank you very much. 28.625, like that. Great. So, ladies and gentlemen, now what I will do very fast, with your permission, first of all, is to rub this. Can I rub this? Can I rub it? Can I rub it? Rub it, rub it, rub it, rub it, rub it, rub it, mwalimu mweni sungura. Rub it, rub it, rub it, rub it, rub it, rub it. Thank you very much. Thank you very much. Thank you very much. Great. Thank you very much. Now, ladies and gentlemen, there we are. So who can then advise us? You guys now, you are becoming professionals in this industry. By now, you are senior accountants up there. You should be able to do financial reporting very nicely. So then who can tell us, what do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next step for us? Or do we go home? Have we finished the question? Before consolidation, remember, you're right, Meshach, they want us to consolidate income statements. But you see, I cannot start putting them together, and yet there is one of the companies, which is our subsidiary, whose financial income statement is in Uganda shillings. Translate. So translate. So in this case, you come here and translate the foreign subsidiary IS. IS stands for what year? Income statement. Here we translate incomes and what year? Expenses of which subsidiary? Foreign subsidiary. Of the foreign subsidiary. So we start with revenue. We start with revenue. So revenue, what do we have, ladies and gentlemen? Revenue. You simply go on there. Don't even make any adjustments. We agreed with yourselves here. Simply go there. Actually, if I'm the one, so like now the first one is 68.50. So 68.50. We have cost of sales. Cost of sales, I can see a figure of 35.50. Remember, it is the last column, which happens to be the Uganda column, right? All right. So I can see the next expenditure there is called administrative expense. Administrative expense, thank you very much. The administrative expense there is 3,300, 3,300. After that, ladies and gentlemen, we have distribution. I'm not able to see those figures very well, but with your help, I'm so sure we shall So we have administrative expenses. The 300, this is total. So administrative expense is 860, 860, 860. From there, we have, ladies and gentlemen, we have distribution expenses, distribution expenses, distribution expenses. What do I have there? Distribution expenditure. The figure that I'm able to see there comfortably is 150, 150. Then I have the finance cost, the finance cost. So finance cost, I'm able to see a figure of 210, 210. And then the next expenditure that I'm able to see there very first is the income tax expense, income tax expense or taxation. So taxation, what am I able to see there? Taxation, what I'm able to see for taxation there is 450 for Uganda, 450 for Uganda. And that is it. Ladies and gentlemen, now advise me. These are Uganda shillings. I would want to change them to Kenya shillings because Kenya shillings is our reporting currency. So could you kindly tell me which rate should I use? Which rate should I use? Of course, I know income and expenses. We normally use average rates, but this was quite a crazy examiner, a sadist of an examiner. He gave us two averages. I mean, people can be bad. People can be bad. Too bad. Too bad. So which average should I use really? Which average should I use here? 25, 25, 25. It should be the average for 6 months. Remember, Uganda subsidiary was only ours for the last 6 months. See how crazy this examiner was. Don't you think this examiner is a sadist? What do you think of such an examiner? Okay, great, great. So we are using the average for the last 6 months. So the average for the last 6 months, which is what here, somebody 26.5 for the last 6 months, 26.5. Yes. So very, very fast. So we are using 26.5 down, down. Remember, income statement items, translate them always using what here? Using the average rate. So divide by 26.5, divided by 26.5, divided by 26.5, divide this by 26.5. So could you kindly give me these figures very fast? Give me these figures very fast. There's a distribution cost somewhere. I'm being told that Mwalimu, there is a distribution cost somewhere. There is a distribution cost of what amount now here? Is it 580, 580 or something? Yes, there's a distribution cost of 580. Thank you very much for that. There is a distribution cost of Kenya shillings, not Kenya shillings, Uganda shillings, 580. So divided by 26.5 to get Kenya shillings. So could you then move very fast and give me these figures, please? Move very fast and give me these figures, please. So revenue, how much? Revenue, how much? Revenue, how much? Please talk to me. 25.8.49. 25.8.49. Is that correct? Is that correct? Is that correct? Right. How about cost of sales? How about cost of sales? 133.96. 133.96. From there, ladies and gentlemen, we have administrative expenses. Admin expenses, how much? Admin expenses, 32.45. 32.45. Now remember that these are Kenya shillings. Now remember that these are Kenya shillings. From there we have, I think the next one was distribution cost. So is there somebody who is able to give us this distribution cost? 21.89. 21.89. And then the gentlemen, please, distribution cost. Are you able to see the distribution cost? Distribution cost. Distribution cost. Are you able to see the distribution cost? 5.66. 5.66. And then we have finance cost. Is there anybody who is able to see the finance cost? Is there anybody who is able to see the finance cost? 7.92, thank you very much. How about the taxation? How about the taxation? Taxation, what are you able to see there? Taxation. Taxation is 16.98. Have we forgotten any expenditure? Is there any expenditure we forgot up there? Is there any expenditure we forgot up there? Is there any expenditure we forgot up there? Other operating, I'm being told other operating. Other operating expense is supposed to be how much? Other operating expense is supposed to be how much? Oh, distribution cost is supposed to be other operating expense, 150. Oh, what happened? Okay, now I understand what you guys are saying. That Mwalimu, this distribution cost now is here. How about you coming and telling us that this is supposed to be the other operating expenses? Thank you very much. Now, after making that change, is everything all right here? Is everything all right? Is everything all right? Thank you. Now from there, come and give us the name of the company. Tell us P Group. Consolidated comprehensive income statement. Comprehensive income statement. So start with revenue. So revenue. Now you are consolidating, you're putting things together. You're putting things together. Now we start with revenue. We start with revenue. So revenue, ladies and gentlemen, what do we have for revenue? For revenue, I can see revenue here. I have 1368. I have 1368. So 1368. 1368. Remember that's for the parent. Parent, I always take the whole of it. Plus L Limited. L Limited was our subsidiary for how many months? L Limited was our subsidiary for how many months? L Limited was our subsidiary for how many months? They are not talking to me. I don't know why. L Limited. We only consolidate parent and subsidiaries. We only consolidate parent and subsidiaries. You guys told me somewhere that L Limited was our subsidiary for 9 months. Prorate 9 months. Thank you very much. So in this case here, times 9 over 12, times 9 over 12. So we have there 774 times 9 over 12, plus we also have another subsidiary. So the other subsidiary, I know it was my subsidiary for how many months? For 6 months. So I should take what times what somebody is following. Their subsidiary is a Uganda, is a Uganda, is a Uganda, is a Uganda. Their subsidiary is a Uganda. So Uganda now, I need to take what times what? Yeah, this. You know, you always get, I don't know, for whatever reason, you always get somebody picking the Uganda, bringing the Uganda shillings again to come to add them to Kenya shillings. All right. So we have already translated them to Uganda, or rather to Kenya shillings. So I need to come and pick this one, which is 258.49. It was only ours for 6 months. So what adjustment do I need to do? What adjustment do I need to do to revenue? What adjustment do I need to do to revenue? What adjustment do I need to do to revenue? Subtract intra-sales. Subtract intra-sales. The internal sales are fake. Kelvin, not Kelvin, there's somebody who has said UPS. We don't take UPS to revenue, really. It is only the intra-sales, which is fake. Thank you very much for bringing that up. It's only the intra-sales that is fake here. And the intra-sales we are told here, the intra-sales we are told, ladies and gentlemen, the intra-sales we are told here, the intra-sales, there's a place they told us about intra-sales. There's a place they told us about intra-sales. During the year, ended 31st March 2013, P Limited sold goods to L Limited for 28 million. These are serious relatives. These are serious relatives which can never sell goods to each other. If I simply go to a serious relative of mine, like for example, if it's my father, if my father, for example, ladies and gentlemen, is selling a few items here and there, if I go to him, call him nicely out, Daddy, I need this. Trust you me, my father can't sell to me anything. If he has that capacity, he'll give it to me automatically. The same case with group structures. Parent and subsidiaries don't do business. If they claim to have done any business, please go out of your way and knock that particular internal sale out. So minus 28, minus 28. Minus 28, minus 28. Air Limited was acquired 12 months ago. Air Limited was acquired 12 months ago. Let's count this thing again. Let's count this thing again about Air Limited. Let's count this thing again. Let's count this thing again. Thanks. Thank you. Let's count this thing again. Let's count this thing again. So we are told, ladies and gentlemen, here that P Limited, a company incorporated in Kenya, is listed in all the East African Securities Exchange. P Limited uses Kenya shillings as a reporting currency. On 1st April 2012, P Limited acquired a controlling interest in L Limited. So which date is that? 1st April 2012. 1st April 2012. So I'm talking about here the date of acquisition, the DOA. The date of acquisition is 1st of April 2012. All right. And then I remember that we came, ladies and gentlemen, and did some legal disposal. We came and made some disposal there. We came and made some disposal there. We came and made some disposal there, right? Of 25%. On which date? We made some disposal. We made some disposal. We made some disposal. We made some disposal, if you remember. We made some disposal. On 1st January 2013, P Limited sold one third of its investment in L Limited. Which date? 1st January 2013. 1st January 2013. And then, of course, the date of the financial statements is 31st March. Is it 2013? Look at the financial statements date. 31st March 2013, yes. Ladies and gentlemen, please listen. I know from the date of our financial statements, I know that this L was acquired more than 12 months ago. But was it our subsidiary for those 12 months really? Was it our subsidiary for the entire 12 months period? No, it was only our subsidiary from this period to the disposals period. So here it was a subsidiary for 9 months, and here from here to here, it was a JV, joint venture, for 3 months. And remember now, when we are reporting our financial performance, we can only report the financial performance of this in terms of our consolidation, this subsidiary, in terms of our consolidations, right? We can only recognize the number of months it was our subsidiary in the year. It was our subsidiary for how many months? 9 months. Robert, are we together with that? Are we together with you in this? It's 9 months. Yes, Robert. Yes, thank you very much. So now you can imagine like that kind of a simple blunder, you get a 0 in the entire question. You get a 0 in the entire question. And that is why I would want us to be really very keen this time around, in our exams. So remember, it was 28, all right? Yes, the date said was 28. Now, could we kindly go to the cost of sales? So cost of sales, what will I do? I'll take the one of the parent fully, 810. There's no doubt about that. So cost of sales, I'm taking the one of the parent fully. Cost of sales, I'm taking the one of the parent fully. $810 for L. I'll only recognize for 9 months. So L, I'll take 407 times 9 over 12 plus the one of Uganda, whose currency has been translated, is 133.96 times 6 over 12. But remember that for cost of sales, we normally do 2 adjustments, actually 3. In this particular case, I'll only do 2 adjustments. Who can tell me what these adjustments are? Who can tell me what these adjustments are? I have to subtract number 1, the intra-sale itself. Remember, intra-sale must be subtracted from revenue and from cost of sales. So minus 28, and then you come and add UPS. Is there somebody who can remember the UPS figure? Less intra-sales and add UPS. Thank you very much. Less intra-sales and add UPS. What is the UPS figure? 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 2.24. The UPS figure is 2.24, like that. I don't have any adjustments here. Could you kindly give me these figures? Please give me these figures, please. Now in form of a whole number. In form of a whole number. In form of a whole number. Kindly give me these figures now. In form of a whole number. Please take this plus this minus 28. Tell me what figure are we getting kindly. The third adjustment is the UPS. The UPS. So somebody is giving me a figure of 1985 up here. I hope you're able to remember this third working, the 2.24. How about the second figure here? The second figure here. How about the second figure? How about the second figure? How about the second figure? The second figure. This was quite a nice question. I wanted quite a comprehensive question. I came across this question. This is a very good question. Aha, so somebody is giving me a figure of 1157. 1157. So could you kindly subtract here and give me the gross profit? So please give me the gross profit. Give me the gross profit. Yes, we shall be able to have another adjustment, like when you have this depreciation on fair value adjustment. Winfred says 2050. 2050, the first one here. Please check again. 2050 minus this. So then what is the gross profit, somebody here? What is the gross profit, somebody here? What is the gross profit, somebody? What is the gross profit, somebody? What is the gross profit? 1156. They're saying that even this 1157 is not okay. They're saying, well, let me use 1156. Is there someone else who is getting 1156? Someone else getting 1156? 1156, thank you very much. Now go ahead and subtract. So please go ahead and subtract. So you take this minus this. Gross profit is 894. Thank you very much. Now from ladies and gentlemen, after gross profit, now go ahead and subtract the other expenses. So subtract the other expenses. So the other expenses, how do they look like? We have here administrative expenses. So we have admin expenses. Admin expenses. So admin expenses, what do we have? I can see, ladies and gentlemen, admin expenses. We have 112 plus 73 times 6 over 12, right? Plus, not 6, but 9. 9 over 12. 9 over 12 plus the other Ugandan subsidiary whose figure, could you kindly, I rubbed mine. Who can remind me what is the administrative expense? What is the administrative expense? Administrative expense of the Ugandan subsidiary? 32.45. Thank you very much. So this 32.45 has to be prorated with what here, 6 over 12. Is there anybody who can tell me the adjustment that I would need to do in these administrative expenses? Is there any adjustment that we need to do? Any adjustment you would want us to do here? Any adjustment you would want us to do here in the administrative expenses? Any adjustment you would want us to do in the administrative expenses? Any adjustment? No. Before the other incomes, any adjustment? I'm waiting to hear from anybody. Yeah. At times, in this case here, the impairment loss can be brought here, yes. But the very best for impairment, if possible, instead of putting it there, especially if you're not given it as a policy, just come and give us impairment here. Of course, published accounts will tell you to bring impairment under admin, but just put it as a separate item. So could you kindly give me this? What is this amount here? Admin expenses. Take this plus this plus this. Give me the admin expense. They're giving me a figure of 183. A figure of 183. Thank you very much. Is it 1 or 1183? It has to be 183, not very far. 183. Thank you very much. Is there someone who can remind us very fast of the impairment loss we got? There's an impairment loss that we even translated to Kenya shillings. There's an impairment loss that we translated to Kenya shillings. How much were we getting? Impairment loss, how much were we getting? Somebody is telling me it is supposed to be 0.68. 0.68. Do we have any other expense? Any other expense? I know what Stephen was saying. There is this other income. There is this other income up here, other income, but fortunately for now, you can see there is nothing there. There is this other income. The other income, especially for the translation, nothing really. So the other income, could you kindly squeeze it somewhere? Squeeze the other income somewhere immediately after your gross profit. And that's why I always keep on telling you that always skip lines. So please come and put other income here. Other income. Mine is quite easy. So other income after gross profit. So the other income, what do we have here? Other income, I can see the one of the parent company. I can see other income of the parent company is 15 and 12. 3 marks really. Other income, we have 15 plus 12 times 9 over 12. So could you kindly give me this other income? Total inakuja ngapi, somebody ya other income? The subsidiary, Uganda, has nothing for other income. Please give me this figure very fast. Please give me this figure very fast. Wanasema 20, 24, somewhere here. Just squeeze it, squeeze it, squeeze it, squeeze it. Great. We are almost finishing. 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 Ladies and gentlemen, listen and listen to me very well. Apart from the administrative cost, I've been able to put impairment loss there. I know the next one will be the distribution cost. Could you kindly do the one of distribution cost and give me an answer? So distribution cost, take 196 plus 64 times 9 over 12 plus 580 times 6 over 12. Give me an answer, somebody. Give me an answer for distribution cost. You are taking 196 plus 64 times 9 over 12 plus 580 times 6 over 12. Is there somebody who can give me an answer for administrative cost? The distribution cost. For distribution cost, is there somebody who has an answer? 255. So I'm being given a figure of distribution cost. I'm being given a figure of 200. It's only one student who gave me the answer. It's only one student, 255. Thank you very much. 255. I'll come and put it somewhere here. Apart from that, ladies and gentlemen, 580 is in Uganda shillings. We are tired. You're right. So it's supposed to be 196 plus 64 times 9 over 12 plus the Kenyan shillings that we got here. The Kenyan shillings that we got here times 6 over 12. The Kenyan shillings that we got there times 6 over 12. I'm sorry. I misled you there. So could you kindly give me the figure here? So they're telling me it is 21.89. Thank you so much. So apart from distribution cost, do we have any other cost? 255, this is coming quite common. And we have said there is a mistake there. Please remember, there's a mistake there. So do we have, yes, we have other operating expenses. Where we'll take 12 plus 8 times 9 over 12 plus the Kenya shilling. Under Uganda, remember this 150 is Uganda shilling, eh? It's supposed to be the Kenya shillings we got here times 6 over 12. So we want to see whether there is anybody who will be able to give us these other operating expenses. Anybody will be able to give us other operating expenses. Distribution cost is 255. Distribution cost, somebody is telling me it's 255. No. Nope. So remember, for distribution cost, what should I do? Distribution cost, if I could go back a little bit, let's first of all go back to distribution cost. Let's go first of all to distribution cost. So distribution cost, what do I have? I have 196 for the parent. So we have here 196 for the parent. Plus, we have 1 for L. So for L, what do I have there? 64. 64 has to be prorated times 9 over 12. Who can remind Mwalimu the distribution cost of Uganda in Kenya shilling? The one that we had already translated into Kenya shilling. Distribution cost of the Uganda. Somebody give me the figure. Somebody give me the figure for distribution cost of Uganda. 21.89. Remember, this is supposed to be translated to what here? Somebody? 6 over 12, like that. Is it correct? 255. So I'm being told that distribution cost is 255. I don't know. It is 255. Oh, it is 255, like that. It is 255. Thank you very much. Ladies and gentlemen, please, let's continue that way. Apart from this distribution cost, do we, yes, we have other operating expenses. Now I should not talk at all. I should wait for an answer from you. Other operating expenses, I expect to get something from you. Other operating expenses, I'll take 12 plus 8. I can't say plus 150 because I know the 150 is in Uganda shillings. I translated that long time ago. What do we have? I can see we have lost already 10 students. So for other operating expenses, how much do we have? Somebody, other operating expenses, how much do we, somebody talk to me. Other operating expenses, somebody talk to me. I'm being told it's 21. I'm being told for other operating expenses. Other operating expenses. I'm being given a figure of 21. So please go to finance cost. Go to finance cost now. So finance cost, what do we have there for finance cost? Finance cost, Is there somebody who can give us, all of us, please try to participate. Try to dance with us. Try to participate. Try to participate. For finance cost, what I'll do, I'll take 50 plus 20 plus the Kenya shilling equivalent here. So 50 plus 20 times 9 over 12 plus the Kenya shilling equivalent times 6 over 12. What are we getting, ladies and gentlemen, here? What are we getting there? 69. Wasilo says 69. 69 for finance cost. They're getting 69. For finance cost, they're getting 69. So then, ladies and gentlemen, could you kindly subtract all these expenses? Subtract all these expenses from your gross profit for you to be able to give us the profit before tax. I know, like in this questionnaire, there'll be the gain on the disposal, gain or loss on the disposal, but those are things that should never scare you. They should never scare you. There are things, if you happen to know, you really do very well in this paper. So Shem tells us it is 389. Shem tells us it is 389. 389. 389. 389. Thank you very much. Once you get this profit before tax, if you recall your published accounts, ladies and gentlemen, once you get the profit before taxation, now you will come and bring the share of profit from the joint venture. So in this case here, profit before tax, I'm being told is 389. So come and give us here a share of profit from the JV. So is there somebody who has that share of profit from the JV? We got share of profit from the JV, share of profit from the JV. I can see Esther is almost sleeping. Share of profit from the JV. These guys are forgotten. It was 28, 29. 29, thank you very much. 29, thank you very much. 29, thank you very much. Approximately there. Ladies and gentlemen, right? Of course, you'll come and give us our taxation here. I know you have the figure, our taxation. Yes, we have here provisions for decommissioning. It has to be taken into account. We have provision for decommissioning. It's because of speed. It's because of speed here. We have provision for decommissioning, which is tax allowable. Provision for decommissioning, note number 4. P Limited operates some machines that pose an environmental hazard for which they have an irrevocable agreement to undertake decommissioning of the machines at the end of their useful life at a cost of Kenya shillings 18 million. The management estimates the remaining useful life of the machines to be 5 years and the relevant discount rate to be 12%. The item has not been accounted for. Ladies and gentlemen, look at this. We are being told that we have some decommissioning expense of 18 million, which is going to be incurred at the end of year 5. But simply because I would want to recognize it today, then what I need to do is to come and get the present value somewhere here. You guys, you have to go back a little bit before this. You must come and give us here the present value of decommissioning. Decommissioning cost. How do we get present value? To get present value, I will take that 18 times 1 plus r raised to negative n. This is pure finance. Pure finance. Because it's a lump sum figure, I will use this 1 plus r raised to negative n. So this one here will be 18 times into bracket here we have 1 plus r. Are you able to see our rate of interest? Our rate of discounting? Rate of discounting, are you able to see our rate of discounting? It is 12%. So 0.12 raised to negative 5. Is there somebody who can give us, it's 5 years, remember, and it's 5 years. Is there somebody who can give us this thing? quite a small amount. Cherry tells me 10. 10. Is there any other student who is able to see that 10? And sure you're able to raise this very well. It will be 18 times 1.12 raised to minus 5. Raised to minus 5. So they're giving me a figure of what here? 10, like that. They're giving me a figure of 10. So please adjust this to be able to get this, and then go ahead and give me taxation. Go ahead and give me taxation. My point really was for us to be able to do what here? Was for us to be able to get most of the entries correctly. Once you have most of the entries, like now these ones correct, you'll end up getting like 7, 8 out of say 10. And if you do that, then you would have done extremely well in your exam. So what I'll do immediately after this, I'll be able to post a solution, a whole solution over this entire question. I want to believe now you'll be able to follow it up, right? I want to believe you will be able to follow it up. It's about exposure. It's about exposure. So long as you are exposed a little bit here and there, trust you me, you'll be able to pass your exam very well. You'll be able to pass your exam very well.